Okay, ready to dive into something that gets thrown around a lot in the investing world? Market capitalization. You've probably heard the term, but what does it actually mean? And more importantly, how can you use it to make smarter investment decisions? That's what we're doing today. A deep dive on market cap, from those mega corporations we all know to the startups hoping to become the next big thing. And we're lucky enough to have expert seeker with us to help us navigate these waters.
It's great to be here. Really understanding this stuff can, I think, really change the way you view the markets.
I'm all ears. Now we've got this Investopedia article you shared packed with insights. What's the first thing our listeners should know about market cap? What's the key takeaway here?
The most important thing to remember is that market capitalization gives us a more accurate picture of a company's value compared to just looking at its share price.
So it's not as simple as like seeing a high stock price and assuming, oh, that's a giant company.
Exactly. Imagine you're looking at two pizzas, right? One is cut into four huge slices, and the other is cut into like 16 smaller slices. You wouldn't assume the pizza with the bigger slices is automatically larger overall, would you?
No way.
You'd want to know the size of the whole pie.
Ah, okay, I'm with you.
Yeah.
So how does that relate to market cap?
Well, market cap is like the size of the whole pizza. It tells us the total value of all the company's shares. The formula is pretty straightforward. It's the current price per share multiplied by the total number of outstanding shares.
So a company with a lower share price but way more shares out there could actually be worth much more than a company with a high share price but fewer shares.
You got it. And this is where those market cap categories come in. Mega cap, large cap, mid cap, small cap, and even micro cap. They help us understand the kind of weight class of a company based on its total value.
So when we hear about mega caps, we're talking about those titans of industry.
Absolutely. Think Apple, Microsoft, Amazon, companies worth trillions of dollars. These are the behemoths of the market. They often have established market dominance, diversified revenue streams, and a track record of weathering economic storms.
Makes sense. But the article also mentions that even these giants aren't risk-free. I mean, they seem so stable. What could possibly shake their foundations?
That's a great question, and it's important to remember that no investment is entirely without risk. Even mega caps can be affected by things like major technological shifts, regulatory changes, or even just shifts in consumer behavior. Remember what happened when smartphones came along? Entire industries had to adapt or risk being left behind.
Wow, that's a really good point. So even though mega caps might seem like the safest bets, it's still important to do your homework.
Absolutely. And that's where understanding the nuances of each market cap category becomes so crucial. It's not just about the size of the company, but also its growth potential, risk factors, and overall place in the market.
So we've talked about those mega caps, the companies that are practically household names. But what about like the other end of the spectrum? What can you tell us about those smaller companies, the ones with maybe a bit more room to grow or stumble?
That's where things get really interesting for investors who are comfortable with a bit more risk. Small cap and mid cap companies, while potentially more volatile, often represent those hidden gems with a significant upside potential.
Because they could be on the verge of something huge.
Precisely. They might be developing groundbreaking technologies, entering new markets, or um, disrupting established industries. Think about the early days of companies like Amazon or Tesla. They were once small caps with ambitious goals and the potential for exponential growth.
Okay, so if someone is looking for that next big winner, those smaller cap companies are worth investigating.
They certainly can be, but remember, with higher potential rewards often come higher risks. It's essential to do your due diligence, understand the company's financials, its competitive landscape, its long-term strategy.
Right, so it's not just about blindly chasing those what ifs. It's about informed decision making.
Exactly. And that's where understanding market cap in the context of all these other factors can be so valuable. It's like having a roadmap that helps you navigate the complexities of the market and make more informed decisions.
This is reminding me of something from the Investopedia article. It mentioned that a company's market cap can fluctuate even if the company itself isn't doing anything dramatically different. How is that possible?
That's a great point. You see, market cap isn't just a reflection of a company's intrinsic value. It's also influenced by investor sentiment and broader market trends, for example. If there's a surge in optimism about a particular sector, let's say renewable energy, companies in that sector might see their market caps rise even if their underlying fundamentals haven't changed significantly.
So it's like a popularity contest to some extent.
In a way, yeah. Investor perception and market psychology can play a significant role. That's why it's essential to look beyond short-term fluctuations and focus on the long-term fundamentals of a company.
This makes it clear that understanding market cap is just one piece of the puzzle, right? What other factors should people be considering when making investment decisions?
You're absolutely right. Market cap is a valuable tool, but it's not the be-all and end-all. You also want to delve into the company's financials, their management team, their competitive advantages, things like that.
That makes a lot of sense. It's about getting the full picture, not just focusing on one metric.
Precisely. Think of it like being a detective. You're gathering clues from various sources to build a compelling case for or against an investment.
Okay, so we've talked about those larger companies, the smaller ones. Is there a sweet spot in the middle? A place where you might find a good balance of stability and growth potential? Okay, so we've talked about those larger companies, the smaller ones. Is there a sweet spot in the middle? A place where you might find a good balance of stability and growth potential?
You're thinking about mid-caps, right?
Yeah, I guess so.
That's often where investors look for, the best of both worlds. These companies are well established enough to have a track record and some market share, but they might also have more room for growth compared to those mega caps.
So they're kind of like the teenagers of the market, figuring things out, but with a lot of potential ahead of them.
I like that analogy. They're not the new kids on the block anymore, but they're not quite running the show either. And that can present some intriguing opportunities for investors.
This all ties back to diversification, doesn't it?
Well,
That word gets thrown around a lot in investing. But how does understanding market cap play into building a well-diversified portfolio?
diversification is all about not putting all your eggs in one basket, right?
Right.
And that applies to market cap as well. By having a mix of mega caps, mid caps, and even some carefully chosen small caps, you're spreading your risk and potentially setting yourself up for more balanced returns.
So you might have those mega caps as your more stable foundation and then sprinkle in some mid caps and maybe even a small cap or two for potential high growth opportunities.
Exactly. It's like constructing a building, right? You want a solid foundation, but you also want the flexibility to add different floors and features as your needs evolve.
This has been so helpful. You've given our listener a lot to consider. Before we wrap up, is there anything else they should keep in mind as they navigate the world of market cap?
It's easy to get caught up in the numbers and the categories, but remember that investing is ultimately about the future. It's about identifying companies that you believe in, that you think will be successful in the long run. Market cap can be a valuable tool in that process, but it's essential to use it in conjunction with your own research, risk tolerance, and overall investment goals.
That's such an important reminder. Don't just follow the crowd. Do your own digging. Well, thank you so much for taking us on this deep dive into the world of market capitalization. It's been really enlightening.
It was my pleasure.
And for our listener, if you're ready to put this knowledge into action, be sure to check out the full Investopedia article linked in the show notes. It's got even more details on market cap and how it can help you make smarter investment choices. Until next time, happy investing.